Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro dollar, a third consecutive indecisive pattern yesterday, this time an indecisive doji cross with a long tongue on top. The market was capped, unsurprisingly, by the June 2025 high at 118.29, with the June 2018 high at 118.51 a little beyond that. The base, again somewhat unsurprisingly, was the slowly rising green short medium moving average, currently 117.71. Further below we have the October 21 high at 116.92 and the mauve medium moving average, currently at 116.91. Overall, the market remains within the mid 25 based bright red shallow bull channel, mid 25 today, bright red shallow bull channel, currently 116.13 to 120.91. Now this pattern is the main showrunner for this market. Finally, as I said last week, given the very lopsided double top pattern in sterling against the US dollar, I had a fresh look here. We might just have an even more lopsided double top pattern from mid-January to date. The key here would be below 117.64. So far we have not closed below this as yet, though we have pierced it. Now so far today, a higher open, but then dropped down to the green short medium average where we've been seemingly stabilizing, but then we've moved back up again. Cable, aka sterling against the US dollar. A higher but still indecisive spinning top pattern yesterday after the previous session's bullish army. The market got stopped in its rise by the viscous congestion band between 135.55 to 135.16, containing the 2019 high at 135.16, as well as the rising green short medium moving average, currently 135.21. Meanwhile below, support came in, unsurprisingly, at the September 2020 high at 134.83. Overall prices maintain their stance within the previously broken and now seemingly repaired very shallow dark blue bear channel. And that's dating between early July to early August last year, though that's through to late January this year currently, and it's 129.77 to 136.04. Additionally, and this may be because I've been staring at a LME 3-month zinc chart for a little bit too long, but we can have the action since mid-January today as a very lopsided, really eccentric double top. The key level to note is the low 3 weeks ago at 135.06. Late last week we had consecutive closes below this level, and I've thus set out targets below for this pattern of a primary target X down at 134.17, with a secondary harder to reach target X1 down in the 133 zone. I can of course extend these lower if we measure from the late January peak instead of February, but I've done that from February here. So far today, a dip below the September 2020 high at 134.83, but not really strong incentive to tackle the next supports below, and they're potentially formidable supports. The flatlining gold long moving average at 134.45 and the 2024 high at 134.36. US dollar against the Japanese yen. A possible hanging man pattern yesterday after the previous session's indecisive doji cross. Prices did not like the dip down yesterday. We're just holding at the round number at 154 even, with no significant or even minor supports nearby. Overhead, well, we were capped once again, previously on the closing basis, but this time at the high of the market by the slowly rising mauve medium moving average, currently 155.13. Overall, we are still within the dark blue late January to mid-February bearish Andrews pitchfork, in between the dark blue middle time below, currently at 152.79, and a dark blue upper time above, currently at 156.21. Further above we have the June 1990 high at 155.78, with the flatlining green short medium moving average, currently at 155.95, just beyond that. In the even larger picture, it will remain within the previously breached but seemingly repaired bright red April to November 2025 bull channel. It's currently 151.47 to 158.33. I suspect I may need to finesse this bull channel to a slightly more acute bullish angle, but we'll see. Finally, continuing a theme of a very lopsided double top in sterling against the US dollar, and even more lopsided double top in euro against the US dollar, we might have here a very nascent, and I stress that word, nascent double bottom. The key level will be the significant move up over 157.72, preferably with closes. Something to bear in mind. Now, so far today, well, a significant move higher over the mauve medium moving average, then the June 1990 high and the green short medium moving average, and now challenging the dark blue upper time of the bearish shift pitch hawk, but we've come back down a little bit since then. US dollar against the CNH, the offshore Chinese yuan. A second bearish black crow yesterday after the previous session's indecisive spinning top. That hid actually a possible bearish harami in there. Prices broke down through the May 23 low at 689.53 and down to test the recent low at 687.95. We're now between two broken bear channels. The original December 25 to early February bear channel below, which is currently 683.20 to 687.70, and the more recent, but also broken, shallower early January to early February bear channel above, currently at 690.70 to 694.31. But further below, we have the significant 50% Fibonacci line of the February 2022 to April 2025 move at 686.60, with further congestion at 685.58. Whilst above, we have the bright red trendline extension, currently at 693.33 of the May to August 2022 ascending triangle. Well, so far today, capped by the May 23 low and a move lower to new lows not seen since November 2024. US dollar against the Brazilian real. An indecisive doji cross yesterday and just about a bearish third black crow after the previous session's bearish closing black Maribosa. It was a new low close, one not seen since May 2024. The move down was halted by the 50% Fibonacci line of October 19 to December 24 move at 513.82, and it'll be interesting to see how the market deals with this support, as below this and not too far below, we next have the bright red October 2018 to date uptrend, currently at 512.64, though in truth, below this there seems to be very little until the congestion at 501.48. Overall, we are still within the important dark blue mid-December 24 to mid-April 25 bearish shift pitch hawk. We are just below the dark blue middle time, currently at 521.39. This bearish shift pitch hawk is still the showrunner here for this market. US dollar against the Mexican peso. An immediate countering, key reversal up and bullish double yesterday after the previous session's bearish engulfing pattern. The market bounced up off the dark blue lower bear channel line, currently at 1709.32, and that's of the breached November 25 to date based bear channel, which is currently 1709.32 to 1754.39. It is not a too well defined bear channel, but it's still there and has been the showrunner here since late last year. However, in the attempts lower in January and February, prices found it tough testing the March and April 2016 lows at 1709.23 and 1703.89 respectively, as it did yesterday. We've seen the reactionary move back up because of that. Even now, this hasn't stopped the market forming a possible bearish cat's ears pattern over late January to February, though so far the pattern has not been triggered on the downside, though it is even now still close. However, the longer the market hesitates, the less likely it may happen. I suspect this hesitancy may be due to the influence of the nearby bright red neckline extension below to the January to May 2021 head and shoulders top, currently 1680.64, as well as I suppose the bright green middle time, currently at 1701.20, of the bright green April to November 2025 bearish shift pitch hook, which has helped to show the bearish angle of attack of this market. Further down we have the 2023 low at 1661.94, and is all that stands in the way before the significant congestion zone 1625.52 to 1646.25. Overhead we have the July 2017 low at 1743.74 and a whole mess of congestion between 1756.93 to 1766.16. So far today, well, not much. We're either side of yesterday's close.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.